here in Turkey in terms of overall development. I have briefly last night told my colleague, the president of Musiad, and his colleagues that whichever way you look at it, Turkey certainly qualifies as a bridge between the developed and the developing world. Since Turkey is one of the most developed of the developing countries, if I can judge this right. I find that the dynamism of the economy of Turkey and the fact that it had gone through such a variety of phases in its overall development and the very rich history behind it does make us proud of Turkey's progress, especially within the context of the Islamic Ummah all over the world. I'm standing here before you as chairman of the World Islamic Economic Forum. And the World Islamic Economic Forum was actually an offshoot and was actually founded by the Organization of Islamic Countries, which was a gathering of Islamic countries that had got together more for political than developmental reasons. But within a few years of our organization at that time, starting very small, as a very small attachment to OIC, we have managed to split ourselves out of the OIC and become independent enough to give top priority by which the Muslim Ummah in the world requires most attention, and that is in economic development. That is why, Alhamdulillah, for the last 9 years, and we are in our 10th year, our name seems to spread nicely. And more important is the fact that our organization seems to have been accepted by the rest of the world, especially the non-Muslim world, especially even the most developed of the non-Muslim world, as an organization that seems to have got the right priority and given the right attention to this priority and its overall economic development. I say this because with pride, last year, we had the 9th World Islamic Economic Forum in London. And to be in London is something to be proud of, simply because London indeed is the center of finance, the center of business, the center of industry, a center that is accepted as something which attracts the economic world together. And with the full support of the government, Alhamdulillah, we consider it that was the most successful and the biggest, the most well-accepted WIEF we've ever had. And we will use that as the basis for our efforts to make the World Islamic Economic Forum more and more well-known and accepted as an organization that sets aside issues relating to politics or religion. Indeed, we even prohibit discussion on those, but concentrate only on the real need of the Muslim world, with bridging ourselves to the Western developed world so that together we can move forward, inshallah. I would like to congratulate Musiad for the tremendous contribution that it has made to the industrial and business sector of Turkey. Your activities had been well known, and last night I told the President, after listening to his speech, that as we listen to the speech and statistics given to us to show what Musyat had been doing, how it had grown into something huge actually, we felt very small, but then we are on a different pedestal. We're just a facilitating organization. And we'd like to thank Musyat for his continued support, even providing a member of our International Advisory Panel. We have heard the speech of your President just now and the statistics that had been presented as per the existing situation in Turkey and the plans ahead that Musyat has, and I'm sure the government of Turkey has, in order to develop the acceptability and widespread utilization of Islamic bank and Islamic finance. Let me, in a very small way, reassure you that Islamic banking and Islamic finance has literally caught fire. What do I mean by caught fire? It's just excited quite a lot of people, especially the business sectors all over the world. Now, you are witnessing an extraordinary situation where even the most un-Islamic banks or un-Islamic countries want to be involved in Islamic banking and Islamic finance. Now, it is not uncommon, for example, that a huge project in London would announce the intention of implementing the project whereby the financing is through Islamic financing. Now, it is becoming more and more common that anybody who knows about Islamic finance, when they want to do anything, the first thing they think about in wanting to develop their project is to think about the possibility of going to Islamic finance. We have witnessed an extraordinary situation 10 years or so ago, whereby the collapse of the established, if I may say also Western type of banking, had really given a shock and produced shock waves in the financial world. There was almost complete disbelief because trillions were lost. There was a lot of suffering. There was a lot of losses. And these were apparently the result of scandalous administration and management of the system. Islamic finance and banking in those early days were relatively unknown and was tucked in a very remote corner in the financial world. And somebody took it out a little bit and said, what about trying this? And then the questions were asked, what is this? It is Islamic finance. Islamic finance? Oh, no, I don't understand. I don't want to do it. There's no chance. But alhamdulillah, some scholars, some bankers got together, really churned it out and looked at it and have discovered that the fundamental thing about Islamic banking and finance is, number one, the mentality of putting aside greed. Number two, the apparent demonstration of accountability and transparency. Number three, the fact that the system shares risks together and not only one side or the other is something that had become very, very attractive. There were and still are lots and lots of issues that are being looked at. Almost every other day, almost every other week, you have different committees and commissions formed all over the world, especially in the Muslim world, to look at it, to look at issues and try to coordinate and collaborate together so that ultimately the idea is that Islamic finance would truly be acceptable to industry at large, irrespective of what racial group they come from. I happen to be chairman of a so-called eminent persons, so that every 2 years we could select the Islamic finance personality of the world. And the next one will be in September. We select the personality based on their contribution to Islamic finance and banking. I'm mentioning this because issues that relate to coordination and standardization are the issues that we need to pay attention to. And I hope you do look at these issues during the course of your meeting today. Insofar as the World Islamic Economic Forum is concerned, we do have confidence in the ability of bankers and business people who have been successful to get together and apply their mind to this very important, crucial base that makes your business successful or fail or a failure. Why? Because the fundamental issue is, where do we get the money? And how do you get the money? How is the money going to be administered? How is it going to be utilized? If it's wrongly done, you are kaput, to put it very simply, in German or in Dutch. If you're kaput, then there's no meaning. And economic development needs very quick decision in terms of dealing with finance. Ladies and gentlemen, I have never felt honored than today standing before you, because when I met some of you, I'm psychologically affected, because I say, my goodness me, there are many, many clever people, good people, experienced people who are gathered here. At the same time, I'm excited of the possibility of your contribution, and I hope that this is not the end, but the beginning of the contribution of the business community through Musyat in Turkey, and in turn through WIEF at the global stage, to contribute for the overall good of our respective societies, and thus indirectly for the overall good of the world economy, inshallah. With those words, I wish you well, and thank you, ladies and gentlemen, and may you have a very fruitful day. Assalamu alaikum. Up to you.
Thank you, Tun Musa Hitam. Ladies and gentlemen, I believe I have done my job in here. Now may I invite all role players to take their seats on the stage. Mr. Osman Çelik, Mr. Murat Çetinkaya, Professor Humayun Dar, Mr. Muzaffer Hisham, and Mr. Nihat Gümüş. From now on, Mr. Çelik will lead the panel.
Thank you very much. Assalamu alaikum. Dear guests, you are all welcome to the WIEF Mushat Roundtable. I have the honor today to welcome distinguished guests to such a very special invitation held in this beautiful and historic city of Istanbul. We have valuable speakers today and in this meeting, and they are representing regulatory agency, education and innovation, Islamic banking, and the stock exchange. Let me briefly introduce our speakers. Mr. Murat Çetinkaya is the Deputy Governor from Central Bank of Turkey. And also, he has experience in Islamic banking. And the professor, the Muzaffer Hisham, Mr. Muzaffer Hisham is the CEO of the Maybank, and he is the big, CEO of the biggest bank in Malaysia. And Professor Humayun Dar is the professor in CF and chairman, President Albiz Consulting Limited from United Kingdom. Mr. Nihat Gümüş is the assistant director in research department from the Borsa Istanbul Stock Exchange, Istanbul Stock Exchange. And the objective of the roundtable is to review the Islamic finance in Turkey with its all breakdowns, such as the sector shares, recent trends, and the growth rates, legal framework, product, human resources, and try to provide you a deeper understanding of how Islamic finance is promoted and transferred in Turkey. In this context, all the important aspects of the topic will be dealt with valuable speakers having high expertise in their fields. Before proceeding to our valuable speakers, I want to make a brief introduction. As the only representative coming from Turkish participation banks, in fact the Islamic banks in Turkey, I believe that it will be very fruitful to take a look at the overall picture of Islamic finance participation banking system in Turkey and the Turkish economy. Okay. As can be seen on the screen, Islamic finance in the world has exceeding a volume of $1.7 trillion and continues to grow at an annual rate of around 15%. According to the Ernst Young's World Islamic Banking Competition Report 2013, the global Islamic finance industry has chalked up an average growth rate of 19% over the last 4 years. All these developments shows that the system grows like a snowball. It is expected to reach a volume of $4 trillion in 2020. Furthermore, the expansion in Islamic finance is not limited to banking sector. You will see from the chart that the Islamic banking has more than 80% in Islamic finance. But when we say the Islamic finance, we are talking about the sukuk operation and the Islamic finance instrument, the other Islamic finance instruments, together with the Islamic bank. And if we look at the development of Islamic banking sector in Turkey, we will see that the participation banks have grown twice as fast as Turkish overall banking sector during the last decade, and now representing around the 6% of the total banking system. The asset volume of the Turkish participation banks reached to 96 billion Turkish lira. It's approximately $50 billion. Especially having gained the full banking status at the end of the 2005, participation banks have displayed rapid growth in all indicators since then. As expected, all the financial authorities, Turkey is one of the most appropriate areas in terms of Islamic finance development. When we take in hand the headlines making this thesis realistic, are the first one is the boosting and the successful Turkish economy with growing strong financial structure resilient to the global financial crisis. As you know, due to the resolutely implemented structural reforms and the successful macroeconomic policies, Turkey has become one of the fastest growing economy in its region, and now it is the 19th largest economy in the world. While many economies have been unable to recover from the recent global financial recession, the Turkish economy expanded by annual average real GDP growth of 5% during the last decade. Furthermore, according to the OECD, Turkey is expected to grow between 2020 and 2070 with an average rate of 5.2%. This chart shows the growth rate of the Islamic banks during the last 10 years. When we look at the beginning of the 2001, the percent was 1%. The share of the Islamic banks in banking sector was 1%. And during the years, the share reached to 6% in terms of assets, in terms of deposit, and in terms of credit volume. And this table shows the experience and the performance of Turkish economy. And as I said, the Turkey has a dynamism, and the other dynamics of the Turkish economy are the young and dynamic and rich Muslim population, qualified and competitive labor force, positive investment climate, large domestic market, incentives for the foreign investors, and the strong banking system. It is the fact that the Turkish banking system has successfully passed the stress test with the real crisis scenarios. As we know, the sector has demonstrated remarkable resilience to the effects of the global financial crisis and the local political crisis without any government backing up to now. And the other dynamics of the Turkish economy is the target of being a global financial center of Istanbul. Turkey's significance on the world finance stage is on the rise. The financial capital of Turkey, Istanbul, is now slated to become a global financial center. This target motivates not only the participation banks, also conventional banks to focus more on Islamic finance. Now, it is time to call upon valuable speakers to speak. And before giving them to the floor, I want to ask a question to the first speaker, Mr. Murat Çetinkaya, and then I want to give the floor to him. As I said, Mr. Çetinkaya is representing the Central Bank of Turkey, and Mr. Çetinkaya, according to your opinion, how important is the promoting Islamic banking in Turkey? We know that this issue has been worked detailedly in Central Bank, in your bank, and In this context, I think you will give us a detailed information, and I want to invite you to the floor, please.
Thank you. Good morning, ladies and gentlemen. I would like to start thanking WIEF and MÜSİAD for organizing such a successful and important event here in Istanbul, in Turkey. As mentioned, being Turkey and Istanbul very special and unique in terms of Islamic finance with its strong growth fundamentals and the growth potential. Today, I would like to give a short, brief presentation about the snapshot of the latest status about Islamic finance and a few words about the prospects for Islamic finance in the Turkish market. So for the overview, what we see is that the key features of Islamic finance are very critical, meaning it is non-speculative, it is well known to be based on risk sharing, and it is asset-backed, and it promotes trade, and it is real sector driven. So it is a young industry with less than half decade, half centuries, but with its unique but successful experience. Today, what we see is that there are 4 key features that are critical for both the players, policymakers, regulators, and the customers globally. First of all, Islamic finance is global. It is not specific to a certain geography, although it started in MENA region. Now we see that in more than 80 countries, we have Islamic finance institutions operating. It is technical. It is ethics and principle based. It has its values. It has some challenges for the conventional finance, but at the end of the day, it's a technical financing facility. So it is demand driven. So we can see that it started with the retail demand, but now it provides several products ranging from project finance to government financing, including the sukuk market. And the 4th one, which is critical for the policymakers and regulators, Islamic finance is discussed to be stable and resilient. It achieved strong growth, but in a resilient way. So, So for a snapshot, it is new but fast growing. For the last decade, year-on-year growth was around 20% per annum, which is critical. It resisted crisis and turbulence domestically and globally. Its total assets are now around 1.3 trillion US dollars. And the global coverage is increasing, more than 300 institutions operating on the principles of Islamic finance in almost 80 countries. And it has been providing new products. For instance, the sukuk market has been very innovative. Now, in less than a decade time, it has turned out to be a market with a coverage of more than 150 billion US dollars. But still, it is a niche market, and it is bank dominated. So for a rapidly growing industry, its global trend was very strong. In Turkey, for the last 10 years, it was growing double the sector averages. It was almost the same in many countries. And with new products, including sukuk and tekaful, which is the Islamic finance-based insurance model. But when we consider the decomposition of Islamic finance assets, it is more than 80% based on banking assets. So for the capital markets, for insurance and other items of finance, what we see is that still Islamic finance has way to go. So what can we expect for the future? What can Islamic finance offer more? Basically, the key driver would be from the demand. What we see is that as it becomes more global, as the customers becoming more familiar with the business model of Islamic finance, the demand is increasing. So it has the challenge to provide competitive products and services to its customers. And we see that growing Islamic population and the increasing wealth in Islamic countries with the potential growth trend will be providing the chances for Islamic finance to grow. And in these countries, in most of them, still the penetration levels for banking and finance are low. So for the way ahead, first of all, we can say that there is strong room for growth. It is still a small part of global financial industry. It is bank dominated, so it means that there are room for capital markets, insurance, and other items of finance. And it has room for geographical diversification. For instance, EU still does not have strong Islamic finance services. So there is room for growth in terms of geography as well. But we should talk about the challenges also. One challenge is the strong conventional finance competition. We know that in banking, in capital markets, still conventional finance has strong fundamentals in terms of their product coverage. So for this young industry, it's a challenge. And one other issue, which is critical for both regulators and the players in the Islamic finance world, is maintaining the basic principles. Because as we have this harsh competition, what we see is that competition sometimes leads to convergence, meaning that the conventional banks and finance entities are providing Islamic finance products, and at the same time, Islamic finance entities have the challenge to better compete, to provide products and services that are similar to the conventional finance. So what we see is convergence, and convergence may sometimes lead to fragilities and some challenges in terms of maintaining the basic principles. And one important item is the regulatory challenges. So for the policymakers, for central banks, for the banking regulators, and economic management of the countries, why is Islamic finance important? I can say two main questions. One is, we should ask whether does Islamic finance contribute to financial stability? Second, what should be done for stable and resilient functioning of Islamic finance entities? Because we see that there is strong demand and we see that there is strong growth. So we want this growth to be maintained in a stable way, not to have any problems in terms of financial stability. So the important question, the contribution of Islamic finance to financial stability. First of all, we well know that it helps financial inclusion. And its resilience to financial crisis has been a new but important question. We see increasing academic work on this, as it is asset-backed and it is argued to be preventing excessive risk-taking and speculation. And the prohibition of sale of debt is very critical, as what we see in the recent global financial crisis is very much related with this issue. So for the resilience to financial crisis, it still needs to be tested, I should say. And the convergence between Islamic finance and conventional finance is a question mark. So it should be closely followed. And secondly, Islamic finance requires further sophistication of products, and sometimes sophistication brings new fragilities. So for the policymakers, what is our homework? What should be done? For enabling stable functioning of Islamic finance, regulators should be ready to better understand the business model and the products. And one important issue, we will talk possibly in the Q&A session, that providing risk hedging policies and instruments to the Islamic finance entities, mainly liquidity management, and helping them for their new product developments. So we also need standardization within the country and in general globally, that the products should be more standard. So at the one hand, we have the competitiveness and the growth, and on the other hand, we want to maintain resiliency and stability, but at the same time maintaining the flexibility to meet the customer demand. And for the new global regulatory structure, what we see is that there is a strong reform agenda, and mostly IFSB is managing this process in the Islamic finance world, but still what we see is that Islamic finance does not have that much strong contribution to what is now being discussed and what is now turning into new regulations all over the world. So still there is a room here for the Islamic finance entities. Just one item is, for instance, the liquidity management issues. The global reform agenda requires better management of liquidity, and Islamic banking and Islamic finance still lacks such liquid instruments. So for Turkish experience, it has been already mentioned by Osman Bey. It's since mid-1980s that we have Islamic banks in Turkey. And for the last decade, its growth was very strong. Now we have 4 banks, what we call participation banks, referring to the risk-sharing model. And asset growth was very strong. And now the funded credits market share is around 6%, and funds collected meaning the deposits is around 6.5% levels, and for the last decade it more than doubled. And when we consider the asset composition, asset mix is dominated by loans. What we see is that participation banks are mostly SME banks. They are more based on providing loans and services to the SMEs, and they have been increasing their product base and diversifying the customer base. And the new item on agenda is the sukuk market. Turkey is a latecomer, but nevertheless, in the last 5-year time, it has been growing. Both Turkish FIs, participation banks, and as well the Turkish Treasury had been active in the sukuk market, and we believe that Turkey will be more active in the near term. So just to conclude, what we see is that Islamic finance is on growth track, both globally and in Turkish market. We know that there is room for still growth, but we have the challenges. The challenges are diversification in terms of geography, in terms of customer base and the products. And one of the main challenges is the regulatory challenges. Global reform agenda, because global reform agenda is bringing new regulatory framework, which should be also having impact on the Islamic finance entities. And for Turkey, Turkey has been successful in achieving smooth development of Islamic finance institutions and in leveling the play field in their competition with the conventional banks. Thank you for listening.
Thanks to Mr. Çetinkaya, and thank you for him to utilize the effective utilization of the time. And our second speaker is the Professor Humayun Dar, and he's representing the academy side of the Islamic finance, and we want to learn from his side and what is the academic position of Islamic finance in the world, and whether he finds the level of academic studies on Islamic finance is sufficient, and also how can universities make contribution to the Islamic finance, the development of the Islamic finance and the development of new products in Islamic finance side. Okay, Mr. Professor, it's your turn.
Should I go there, right?
Yeah, please.
Bismillahirrahmanirrahim. Assalamu alaikum. First of all, I must be thankful to Musiad and World Islamic Economic Forum for inviting me to this beautiful city and giving me an opportunity to see a very large number of important stakeholders in the Islamic financial services industry. Can I ask the IT guys to put my presentation on, or it should be? No? All right, okay. Right, no, I actually would like to focus on the education and innovation story about Islamic banking and finance in the context of the future of Islamic banking and finance in Turkey, and of course in the wider world. We'll be spending a few minutes on innovation. What do we mean by it? And second focus of this brief introduction would be on the leadership in Islamic banking and finance in a global context, country level, institutional level, product level, and of course some individuals who are playing an important role in the development of Islamic banking and finance in different parts of the world. I'll be looking into some Islamic finance qualifications because human resource development is critical to the development of Islamic banking and finance on all levels. And a few words on where Turkey stands when it comes to Islamic banking and finance. Of course, there has already been a reference to what is happening in Turkey in IBF, but I would like to look at Turkey's role and standing in the global Islamic financial services industry. And after looking at where Turkey stands today in IBF industry, I would like to suggest a few things, probably one or two, depending on the time before I conclude this session. Now, Islamic financial innovation is actually a very simple phenomenon. So far, what I would like to call as phase one of the development of Islamic banking and finance, we have been focusing on coming up with new products, banking and financial products, to replicate economic effects of conventional products, of course, in a Sharia compliant way. And there is this huge underline in a Sharia compliant way. You know, this innovation has covered almost all the banking and financial products. In phase one, if there was no Islamic credit card, an alternative to conventional credit card, we have come up with a number of Islamic credit cards. Right? But when we look at the economic profiles of an Islamic credit card and its conventional counterparts, they are more or less the same. However, one is offered in a Sharia compliant way, halal way. The other is offered conventionally. When we look at Islamic mortgages, car financing, even sukuk, all these products, they are replicas of conventional products to ensure that Sharia compliant alternatives are available to those who are interested in having access to the financial products consistent with their belief. So that has been focus of Islamic financial innovation so far in what we would like to call as phase one, which is about 35 to 40 years of the existence of modern Islamic banking and finance. Now in phase two, what should be the focus of innovation? Many analysts and close industry observers are now emphasizing that this is the time that we should start developing a new financial system that should come up with products, financial services in such a way that this new financial system actually substitutes for conventional financial system, and it's not indeed part of it, or it should not complement it. This is a very bold statement. So far, Islamic banking and finance has been part of conventional banking and finance. We have been running what we call a dual banking system, including in Turkey, in Malaysia, and in almost all other countries, with few variations except in case of Iran and Sudan, where the governments claim to have developed Islamic financial system. So far, Islamic banking and finance is part of the conventional financial services industry. It is part of it, and in many cases, it complements to it. Okay. So in this second phase, a lot of people have started talking about developing Islamic banking and finance on a systemic level. I must say that this innovation probably is not relevant to what is happening in Turkey. This is relevant for the countries which have matured in terms of their institutions, Islamic financial institutions, Islamic financial products, and so on. And I would refer to the countries which might be candidates for this kind of Islamic financial innovations in a few minutes. Now, leadership in Islamic banking and finance. Okay. We publish an annual report called Global Islamic Finance Report. For last 5 years, we have been publishing it on different themes. Okay. Every year there is a theme. In 2010, we focused on the size and growth of the industry. Following year on Islamic financial innovation. 2012 on Islamic philanthropy and social responsibility. And this year, actually, we focused on human resource development for Islamic financial services industry. As part of that Global Islamic Finance Report, we publish IFC, Islamic Finance Country Index, which ranks about 45 countries of the world in terms of their involvement, engagement, participation, and leadership role in Islamic banking and finance. It's based on a quantitative methodology, and as I said, about 45 countries are ranked. And it happens to be the case that the #1 country on IFC is Iran, primarily because Iran claims to have all its banking and finance sector in compliance with Sharia. Malaysia has consistently for the last 3 years been #2. Saudi Arabia, Bahrain, Kuwait, United Arab Emirates, Indonesia, Sudan, Pakistan, and Qatar. These are 10 leading countries in terms of Islamic banking and finance. And you must have noticed that Turkey is not one of them. Again, Global Islamic Finance Report has come up with this new phenomenon. It's called 2020-650. For those of you who have interest in cricket, it has nothing to do with cricket. Okay. 2020-650 actually refers to a projection. It says that by the year 2020, there would be at least 6 countries in the world which would have the share of Islamic banking sector at least equal to 50%. Okay. Which are these countries? Brunei, Darussalam, where Islamic banking is now almost 46% of banking and finance. Okay. We have Saudi Arabia, about 43, 44 at present, and by the year 2020, we believe that in Saudi Arabia, the share of Islamic banking and finance would be at least 50%, i.e. Islamic and conventional banking would be at least of equal size. Okay. Then we have some other countries like UAE, Qatar, Kuwait, and Kuwait, I said, and Malaysia. Okay. So these are the 6 countries. In case of Malaysia, we think that it should be slightly less than 50%. Given the market growth so far, it could be between 40 and 50%. But if the assumptions are met, then these 6 countries, okay, they would have Islamic banking and finance at least equal to the share of conventional banking and finance in the countries. And I think this would be a huge development. So far, there has not been even a single country where Islamic banking and finance is playing the role of a leader. It is a follower. Okay. But once this happens, a lot of problems associated with Islamic banking and finance would get resolved. The issue of benchmarking of Islamic financial products, for example, once you are leading in the market, you would be setting the benchmark, not the conventional counterparts. Now, the third focus of my presentation on Islamic financial education. I have picked up 5 countries of the world which are playing a significantly important role in Islamic financial education and qualifications. United Kingdom, the country I come from, it has played a tremendously important role in streamlining Islamic banking and finance education in the academia. It happens to be the case that the most important university, University of Durham in United Kingdom, its Islamic finance program is being headed by a Turkish professor. Okay. So Turkey in this way is playing a role in Islamic financial education. Malaysia, of course, okay, this is a very strong player in Islamic financial education. There are almost all the universities in Malaysia, they offer some kind of degree or qualification in Islamic banking and finance. I forgot to mention that in UK there are 16 institutions, including institutions of higher learning, which are offering different levels of qualifications, starting from certificate level to the PhD level. And given the diversity of the degree and qualification programs, the students or registered participants of these programs, they come from all over the world. Locally, the demand for demand for personnel trained in Islamic banking and finance in UK is rather limited. We are only about 2.5, 2.75 million Muslims in the country, with quite a few Islamic financial institutions. We have 6 fully fledged Islamic banks and some other conventional banks. They are offering Islamic financial services as well, but yet still, okay, the demand for personnel in Islamic banking and finance in United Kingdom is rather limited. So UK institutions are actually injecting human resources into other parts of the world. To give the example of University of Durham, 40% of student population actually comes from Malaysia. Okay, and about 7% of the existing student body at University of Durham actually comes from Turkey. Okay. So UK is an important player. Malaysia, as I said, all the universities. Okay, and of course a specialized university in Islamic finance in CF, that is there, which is offering Islamic finance qualifications. Recently, Bank Negara Malaysia, and by recent I mean about 18 months back, Bank Negara Malaysia, the central bank, and Securities Commission Malaysia jointly set up Finance Accreditation Agency, FAA, which for last 1.5 years have been focusing on coming up with a very comprehensive standardization program for accreditation of Islamic finance qualifications offered by any institution in the world. So I think, okay, this is a very important initiative by the Central Bank and Securities Commission in Malaysia. Pakistan is another important player when it comes to Islamic finance education. International Islamic University in Islamabad, Darul Uloom Karachi, okay, and National Institute of Banking and Finance under the central bank. These are a few institutions which are offering quality instruction and qualifications in IBF. Bahrain Institute of Banking and Finance has been involved for a very long time in Islamic banking and finance. UAE is another country, and I must say that I was in Qatar last week visiting Qatar Faculty of Islamic Studies, which is part of Qatar Foundation, and they have come up with a very comprehensive 2 years Master in Islamic Finance program. These countries I have chosen, and these 5 countries, they are important in Islamic financial education because their medium of instruction is English. Thank you. There are some other important players. Jordan, for example, quite a few institutions in Jordan have been offering qualifications in Islamic banking and finance, but fortunately or unfortunately, the medium of instruction is Arabic. Okay, so not very many people have actually benefited from these educational programs in Islamic finance in Jordan. Indirectly, yes. Okay, Jordan, Kuwait, Egypt, they have played a role in Islamic finance qualification. A number of high-ranking professors of Sharia and law in Malaysia, for example, they have attended universities in Jordan, in Kuwait, and so on. So there has been an indirect role of the countries like Jordan, Saudi Arabia, and so on. But because of the limitation of a language, if I put it this in way, Arabic is not that important of a language internationally when it comes to Islamic finance. Okay, so English is a leading language, and I think the qualifications, credible qualifications in Islamic banking and finance should also be offered in English if they are being offered in some other languages. Yeah, I'm going to finish before that. Now question arises, where does Turkey stand, okay, in Islamic banking and finance? The global scene is clear. We have about 1.83 trillion US dollars worth of industry globally. And we have heard the statistics of Islamic banking and finance in Turkey as well, about 50 billion USD in terms of assets. When we look at the Islamic finance country index, you saw that 10 leading countries, Turkey wasn't there, but it's not far away from the list. It's 12th at present. And given the size of the economy and now the huge interest in Islamic banking and finance by the governments and other stakeholders, I believe that Turkey, its role can be much more significant in years to come. What should be done to enhance Turkey's role? Of course, the domestic focus is there. Internationally, we have come up with this MPT alliance idea. M stands for Malaysia, P stands for Pakistan, and T stands for Turkey. Malaysia is undoubtedly the global leader in Islamic finance. Okay, Muzaffar would tell us the exact percentage of Islamic banking in Malaysian banking and finance sector. It's about 22-23%, which is increasing significantly as well. So about between 1/4 and 1/5 of banking and finance in Malaysia is already Islamic, is already Sharia compliant. And there are a number of institutions, not only banks, asset management companies, but industry building initiatives are there as well. The likes of IFSB, now International Islamic Liquidity Management Corporation is working as well and has started issuing sukuk for liquidity management. And as I said, INCF as an institution offering qualifications in Islamic finance. So it's a mature market, and last year the government issued a new Islamic Banking and Finance Act as well. So very comprehensive regulatory framework. There is a lot which any country can learn from Malaysia. Pakistan, because of geographically coming from Malaysia to Pakistan, the share of Islamic banking in Pakistan is over 10% now. It has a lot of similarities with Turkey. 5 Islamic banks, you have 4 participation banks here. And the current government, since last year when it came into power, it has shown a lot of commitment to Islamic banking and finance. So I believe because of these synergies and Malaysia's synergies between Pakistan and Turkey and the leadership role which Malaysia has been playing in Islamic banking and finance, an alliance can be constructed to bring Malaysia into the mainstream of global Islamic financial services industry. And I believe that is the real position of Turkey in Islamic banking and finance globally. So far, it has been a bit below to its potential. So if it wants to achieve its true potential, then it must come into the realm of Islamic banking and finance globally. I think that would, once it happens, the leadership role of Turkey would get established in Islamic banking and finance. Of course, if there are some other questions, I'd be very happy to answer. Thank you.
Thank you, Professor. And Our next speaker is Mr. Muzaffar Hisham. He is the CEO of Maybank, and we want to hear him the Islamic finance experience of the Malaysia and the retail banking activities of the Maybank. Please.
Thank you very much. Thank you very much, Mr. Chilik. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. First and foremost, once again, thank you WIEF and Musiat in giving me and Maybank Islamic this morning a privilege to present here in a wonderful city of Istanbul on Islamic finance. Let's see. Okay, all right. I thought before we go on the round table to just allow me to present about 10 minutes or so, just to run through very quickly a bit of perspective on Islamic finance in Malaysia and how, as a Maybank Islamic, we have contributing to the growth to the industry. First and foremost, maybe just a very quick snapshot of when did we embark in Islamic finance in Malaysia. It all started off with the establishment of the Pilgrimage Fund Board in the late 60s to serve for Muslims to save for their savings to go for the Hajj. And then there was, of course, the establishment of the first Islamic bank called Bank Islam. And for Maybank, we started off as an Islamic window before we became a fully owned subsidiary of Maybank Group in 2008. So our history is relatively quite young within the industry of Islamic banking. Over the years, in our view, why to a certain extent Malaysia as a country has been a success story in Islamic banking, I would like to just sum up from a few key points. First and foremost, in the banking industry, we usually look in terms of a sound and clear regulatory framework. That was provided for by the Central Bank and the Securities Commission. And in terms of our regulation, we are regulated under the now is known as Islamic Financial Service Act 2012, which was recently updated by the Central Bank. Of course, there was a strong vision and support by the Central Bank and the government. For example, the support in establishing the sovereign sukuk in US dollar, the first in Malaysia, and the growth of the domestic ringgit sukuk market after our 97-98 financial crisis. And of course, in ensuring a proper capitalization within all the Islamic banks. As mentioned by the Turkish Central Bank earlier, we want to make sure that the Islamic banks are well capitalized and strong. Of course, in terms of products and services, but the key added advantage, it was also a very clear tax regulatory framework and also a certain tax incentive, not only in terms of domestic Islamic products, but also for global Islamic financial products as well. So because tax is one of the key challenges when we are about to go to abroad, because there's no interest element in the products. Usually the contract in Islamic finance is buy and sell. That always attracts some form of value-added tax or service tax, which added the cost if we were to do offering Islamic financial services. There's also a very clear Sharia framework. We are a believer whereby we should maintain the best practices of what the existing financial regulatory framework is at hand in the respective country. Most of the players, usually players like us as well, we just want to be clear what is the Sharia legal framework for us to ensure that our financial Islamic banking business is in line with the regulatory framework of Sharia. We are very respectful of various Sharia opinions and scholars from various parts of the world, Middle East, Asia, in Turkey and so forth, and in Indonesia. However, for us to conduct business, we just want to ensure that the framework is very clear. One example that I can just quote and share is, for example, when Hong Kong Monetary Authority allow us to trade sukuk and exchangeable sukuk in Hong Kong. And how they approach it is that because they don't have a Sharia framework, they approach it in a full disclosure regime and ensuring the investors to decide in terms of the instruments. So that's sort of example of the framework that we were looking at to ensure that when we go to into the market, we have a clear Sharia framework. The other part, which I also mentioned this morning in terms of competition, one of the key boosts for our Malaysia domestic Islamic banking was allowing competition, particularly when central bank allowed 3 foreign Islamic banking license in Malaysia, which was Al-Raji from Saudi, Kuwait Finance House from Kuwait, and of course from the Qatari, which is the Islamic Banking of Asia, Islamic Bank of Asia, excuse me. In fact, I remembered when they allowed to open up and liberalize the industry, we were excited because it allowed us to run faster, it allowed us to compete in the domestic space, and also to exchange knowledge among the industry players as well. And of course, as mentioned by Professor Ahmad Ayundar earlier on human capital development, this is something that not only in terms of the regulatory, but also players like us and other industry players investing a lot in the human capital development. If I may add, the human capital development is not only in terms of developing Islamic bankers, but a true sound banker that knows both conventional and Islamic banking finance together. Just a quick snapshot of the global Islamic finance. This is based on the 2012 data. I won't dwell too much on this, but I just want to add something that the last couple of years, there is this trend among the industry players in terms of the growth in the Islamic banking, and they always call this term called Kismut, K-I-S-M-U-T, which refers to the Qatar, Indonesia, Saudi, Malaysia, United Arab Emirates, and Turkey as the growth for the future of Islamic banking finance. So this is what I've always constantly hear in the industry, or what they call as the terminology as Kismet. So just to share with the players here. This is a quick snapshot of the Islamic banking growth in Malaysia, and this is the reason why a bank like us in Maybank wanted to enter and grow this industry, because it's an area of growth. And we all, as always highlighted by our board and our shareholders, if we're not in this business, somebody else will be. So we've always have this philosophy that we should be in this business first. And we have this aspiration by the central bank that by 2020 to achieve 40% of the Islamic in the banking sector, which is to contribute by Islamic banking, and which Professor earlier mentioned of 50%. So he's more ambitious than the central bank part of it as well. But just to share with you, for Maybank Islamic, we are contributing to our Maybank group at the moment in Malaysia at about 38%. So we're already achieving that 40% mark, and inshallah, hopefully, we will be able to achieve even more than 50% to our banking group. And one of the key reasons is I just wanted to share with you here that over the last 3.5 years or so, we were in a transformation mode, not only in terms of the Maybank group, but in terms of the Maybank Islamic side. We were finding a way how we could grow faster, how we could grow efficiently, and how could we contribute to the industry. And we have this establishment, what we call a House of Maybank, which complements together with the entire Maybank group in ASEAN and in Malaysia. And one of the key parts is in the diagram, if you could see, is we call it Islamic inspired among the 3 key pillars of the businesses. Basically, the community financial services, which is the retail and the business banking and small medium enterprises, the global banking, which is the wholesale and the investment banking side, and of course, the insurance and the takaful side, which is supported by a strong technological platform, which we call the enterprise transformation services. So this was a focus from the shareholders, focus from the board that we had over the last 3.5 years in terms of us preparing, not in terms of the only just Maybank group, but in terms of Maybank Islamic as well. And our key mission, if you could see in the top line, over the last 3.5 years, was humanizing financial services across Asia. And this is definitely aligned with our philosophy in Islamic banking to be more humanizing financial services, especially after the 2007-2008 financial crisis. Just to share with you, where we are, at the moment, Malaysia is still our key bread and butter. 90% of our revenue is from Malaysia. But the interesting growth that we have seen phenomenally, other than Indonesia in our key home market, is also Singapore. Singapore not only is just a relatively very competitive retail market, but it is a center that also allow to connect the various funds in ASEAN and also from the GCC as well, which contribute to our growth to Maybank Islamic over the last couple of years. So why I mentioned Singapore, because if a market like Singapore could grow in the Islamic finance, we are very confident in other key markets could also grow if the right ingredients and policies are in place. One of the things that we are excited about Turkey, and was, in fact, I'm particularly excited when we heard about the roundtable with WIEF and MUSIAD, is the potential opportunity of trade. And the trade is not just only Turkey and Malaysia. Our view is potential trade between Turkey and ASEAN. And we hope a player like us would be able to facilitate the linkages between Turkey and ASEAN. Not only just Turkey as a point between West and East, but also an opportunity for Turkey to be linked with ASEAN, which is both sets of sector and area of growth in the industry. I won't go too much on terms of the detail, but which I have mentioned earlier, but I do want to just have a quick snapshot of an overall growth in the banking industry in Malaysia over the last 3-4 years, whereby in terms of, as I mentioned, the focus that we had in terms of ensuring that we put the right model and ensuring that we operate maximizing our efficiency to grow over the last 3 to 4 years. And in terms of our deposit, we're outpacing the industry growth as well. And of course, in terms of the financing side, with the rest of the competitors as well. We're also very much involved in the Sukuk area, which I'm more than happy to highlight later on in terms of the potential that we see not only in this region, but of course in the region in Europe, which we all know that the announcement of the UK government of launching its first sovereign sukuk, in fact, by David Cameron at WIEF in London. And of course, the last few months back when the Hong Kong Monetary Authority also as well is launching a sovereign dollar sukuk to be launched sometime in the next few months. And I need to understand also Luxembourg is doing that. So 3 non-OIC countries are launching their global sukuk this year. With that, I once again like to thank you, the organizers, for inviting me. This is truly a privilege and a great opportunity. And I do hope we have a very productive roundtable later on. Thank you very much, sir. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Mr. Hisham. And our last speaker is the Nihat Gümüş, and he is representing the stock exchange. And also, we want to hear from him the financial depth level of the interest-free investment instruments, and also the steps to be taken in this field by Borsa Istanbul Stock Exchange. Please, Nihat.
Good morning to everyone. I would like to thank to all of the organizers, MUSIAD and World Islamic Economic Forum, to give me this opportunity to talk to such a distinguished audience. And I will try to explain some of recent developments in terms of about the recent developments at the capital market side. in terms of Islamic finance. First of all, I would like to explain briefly the recent changes in Borsa Istanbul. Borsa Istanbul has initiated a reform plan after 2012. After demutualizing its structure and becoming a joint stock company, as the main actor of Istanbul International Financial Center project, Borsa Istanbul has been undertaking many projects that will serve to the goals of Istanbul, to the goals of converting Istanbul to an international financial center. And Islamic finance constitutes one of the main building pillars of this objective. And for this purpose, Borsa Istanbul has initiated the first sukuk market of Turkey in 2012. And Treasury has issued the first sukuk ever in Turkey in September as well, in September of 2012. And the issues has 5 times oversubscribed. And recently, at Borsa Istanbul sukuk market, we have sukuk amounting to 3.68 billion US dollar. And number of issuances has reached as of May of 2014, 5. And together there is 13 instruments that is outstanding within our market, and 7 of these instruments are private sector instruments. As another part of Borsa Istanbul's attempts to develop capital market side of Islamic finance in Turkey, Borsa Istanbul has also 3 main indices that is calculated according to the Sharia principles. One is the participation index, the second one is DGIM Turkey index, and the last one is S&P OIC Comsec Sharia 50 index. In addition, we have some ETFs based on these indices and also based on some commodities as well. And as we look to the performances of these indices and ETFs, we see that as a general trend of Islamic financial instruments, the returns on Islamic financial ETFs and indices follows a risk-averse pattern as compared to our main index of BIST 100. At the times of booms, where the BIST 100 index follows a rapid growth pattern, Islamic indices and ETFs follows a rather less risky pattern, reflecting the main conventional allegation that Islamic financial tools can be used to averse excessive risk-taking. And in addition, on the capital market side, recently our main regulatory agency, Capital Markets Board, has made some regulations in order to enhance the institutional investor infrastructure in Turkey. In recent months, in last few months, CMB, Capital Markets Board of Turkey, has announced its regulation on private equity funds, real estate funds, and infrastructure real estate investment trust and participation funds in Turkey. This was an important step. At the end of 2012, Turkey has enacted its new capital markets code. And with this new capital markets code, the development of Islamic finance has been facilitated. And according to these codes, new bylaws has been prepared by Capital Markets Board of Turkey in order to enhance the legal infrastructure of Islamic finance in Turkey. From this respect, for example, some tax regulations has been initiated. For instance, the SPVs, regarding the SPVs that are used in sukuk issuances. All the income of those SPVs were exempt from any income tax, corporate tax here in Turkey for the time being. In addition, as I mentioned, the opening up of those private equities, real estate funds, and infrastructure real estate funds and participation funds will be also possible with these new regulations. This will by no means develop the institutional investor base here in Turkey in terms of Islamic finance. And all of the taxes of these institutions, with some exceptions, will be also held exempt from any corporate tax or income tax. And this is a good incentive for Islamic finance in Turkey to develop. And looking ahead, what is the main opportunity in Turkey for Islamic finance to develop? It is infrastructure finance. You know, the graph on the slide reflects the urbanization speed of Turkish population. In 80s, just 43% of the total population was living in cities in Turkey. And nowadays, it has reached to more than 70%, and it is expected to reach to 75% by 2050. Seeing this fact, Turkish government has initiated an urban transformation plan that includes the renovation of all existing buildings within metropolitan cities of Turkey. And this plan includes and needs 800 billion USD in order to be financed. And this is a good opportunity for Islamic finance and Islamic finance capital markets boards, capital markets products to be used in order to finance this urban transformation process, and the government is keen to use such tools in this process. In addition, as Borsa Istanbul, we have proposed a plan in order to develop the liquidity needs of Islamic institutions, Islamic finance institutions in Turkey. As you know, liquidity is the most critical issue in the sustainability of Islamic banking and other Islamic finance institutions. For this purpose, it is just at the proposal level and discussed among the various stakeholders of Turkish capital markets and Turkish banking institutions. The proposal is called Sukuk Repo Market, to be established at Borsa Istanbul. The proposal is up to the opinions of various stakeholders, but we thought that a market that will enable the changing of cash and sukuk portfolios between intermediaries of Borsa Istanbul, a transaction that will be backed by a CCP, will enhance the liquidity within the sukuk market. Recently, in our markets, in 2013, the total amount of sukuk transactions, total volume, reached to around 650 million US dollar, Turkish lira, sorry. And this is a rather trivial amount, given the fact that even the daily volume in our bonds and bills market has reached to more than 20 billion US dollars. Therefore, we believe that as Borsa Istanbul, we should develop the liquidity in sukuk transactions. And this proposal is one of our attempts to develop the liquidity in sukuk market. And in order to develop research and development in our region and in Turkey, as Borsa Istanbul, together with Central Bank of Turkish Republic, Capital Markets Board, Banking Regulatory Agency, and Turkish Treasury, we have initiated a project that is called World Bank Global Islamic Finance Development Center. The center is sponsored by Turkish agencies, but the center is the center of a World Bank. And it is the first center of World Bank which is opened up outside Washington, D.C. And the center will work to aim to develop Islamic finance both within the region and Turkey. The main areas of interest of the center will focus on the development of a global Islamic financial report, global Islamic financial database, research topics that will include Islamic banking, Islamic capital markets, Islamic finance, and economic development. On these areas, the center will make research and capacity building activities. In addition, in terms of Sharia board governance rules, Sharia board governance standards, the center will do both academic and practical research, and the center will also focus on market development and innovation. As Borsa Istanbul, we are keen to continue our efforts to contribute to the development of capital markets instruments in Turkey in terms of Islamic finance. And at the end of my speech, I would like once again to thank to all participants and to all organizers of this meaningful event. Thank you very much. Have a nice day in Turkey.
Thank you, Mr. Gümüş. And I thank to all our valuable speakers, and they finished their presentation. And now it is your turn, and you can ask questions to our speakers. And I want to make that it is clear, please, if you say your name and address the question whom you are asking, it will be easy for us to direct the question and answer session. Okay, please. If you introduce first yourself.
Yeah, thank you. My name is Tanri Abeng from Indonesia, and I'm glad at least the Maybank speaker did mention about Indonesia instead of only Malaysia, Pakistan, and Turkey, because Indonesia has 240 million, of which 90% is Muslim. So anyway, number one, question is that there are tremendous project financing, particularly in the area of, let's say, infrastructure and mining. Now, these companies are mainly the state-owned company, which I think is pretty safe. Cash flow is a problem. Also, when the price of the commodity goes down, their cash flow is under pressure. But in the meantime, they are already doing the project. Now, question is, can you provide equity portion of the loan so that it will qualify under the 30/70 equity loan structure? Because if not, that means they need to raise local equity, which is at this point in time is very difficult. So that's number one question. Number two, perhaps also Maybank, you talk about the need for accreditation certification. I have a university in Indonesia, and we're just in the middle of trying to push Sharia banking or Islamic banking. Perhaps you can help to provide the accreditation or certification. I think this can be done relatively easy also, which is important. Number three, this is a little bit more fundamental. Indonesia has 56.5 million small, micro, small, medium enterprises. 56 million. And these 56 million contribute 97.5% of the labor force. So actually only 2.5% of the labor force is contributed by the big companies. Now, I think about 90% of this, we call it micro, small, medium, they're mostly micro. And since they are macro, they are mainly in the rural area. Their cluster of area is basically agriculture. They could be in palm oil, you know, with 1 hectare, could be in cacao, could be in fishery, and what have you. They don't have the scale. They are too small. They don't even have a certificate of land, so that there is no way they can try to get funding. And of course, being too small, they cannot have a leverage to sell to the industry. Now, because of that, we have, during the last 2 years, also through my university, developed a program which we call the inclusive economic development. Because what we have in Indonesia now is a little bit more exclusive. Economy has been driven by resources plus the consumption of the middle class up, which is approximately 60 million. But that 170 million really is not relatively touched. Now, by developing these institutions, which we call inclusive corporate institutions for the SME, all those SME, for example, could be 100 or 200 farmers grouped into a so-called cooperative, and 10 cooperative, which would be approximately 2,000 members to be in that corporate. So it is corporatized.
Yes.
So it is not cooperative, but it is cooperatized from cooperative. That way, the system is well structured under the corporate structure, accountability, responsibility, and also because they are now at the corporate level, they have the capacity to network and to negotiate with the industry or the big companies. So this is a new concept. I have been developing this during the last 2 years. I am wondering whether there is a way from the community of Sharia banking or finance banking to be able to look at this. Because if you are able to do this, I think, number one, will reduce the bad loan because you no longer have to go to farmer. You only go to the corporatized farmer. They will be managed. And at the same time, you're actually going to be able to increase the productivity of all those farmers with the right quality because they will be linked to the market. This is an area where I think should be extremely helpful for those populous nations like Indonesia. And I think it should apply to nations even like Pakistan or even in the ASEAN countries. I talk within the ASEAN context, other than Singapore, Malaysia even, I think are in need of this type of structure. If there's anything you can do, I think we would like very much to work with you. Thank you.
Thank you for your contribution, and I want to give the floor to Mr. Muzaffar Hisham for the microfinance of activities of the Maybank and for the project finance also.
Thank you. Thank you very much. Thank God I mentioned Indonesia because Indonesia is contributing at least 12-15% to Maybank Group revenue. Maybe, sir, if I just to understand the first question, yes, infrastructure, mining, the challenge is always on the cash flow. And I think you are right. Each time we always advise to the client, do look at the cash to place in is Sharia banking and also or the financing to the Sharia. And I'm not sure how the Bursa regulation is because in Malaysia and particularly some of the key markets in like the Dow Jones Index and so forth, the composition of Sharia, both cash and liability, it's a prerequisite to ensure that the stocks are Sharia compliant. For us, the benefit to the customer is, or the client, once you have your equity which is Sharia compliant, you open up to two sets of investors. One investors the Sharia funds and of course the investors of the conventional funds. So economics wise, you open up a more diversified funds. Number two, in terms of accreditation, of course part later on we can explore. Of course we are very committed. Our BII subsidiary is a growing banking there, and our team in the Unit Usaha Sharia will be more than happy to explore on the accreditation of your institution. If I may just highlight on the microfinance and SME, this is very important. In fact, we realized our approach as a group in Maybank on SME was also very wrong. We approach SME like a corporate banking. We always review it like a big corporate and so forth. Over the last 3 years, what we have done in reviewing in SME, we're looking at it, and I got to be careful here because the central bank is here. We manage it as a portfolio. We're looking at putting aside 50 million US or 100 million US to a certain portfolios. For example, small medium enterprises of plantation, small medium enterprises of industry, small medium enterprises for agriculture, for example. We note that by managing it as a portfolio, our turnaround time to give the financing to the folks a bit more faster, and also we could manage our risk a bit more effective. In fact, we noticed this based on a very German model because SME was a very important catalyst to the group. On the other point, on microfinance, if I may just add, this is the challenge, to be very honest, in Asia for us. We say microfinance, we want to talk about financial inclusion. If I may be blunt, but when we look at the financial charges on microfinance, it's always above 15% to 20%. It is very high. In fact, what we have explored in terms of our research in our Sharia research team, we are exploring, in fact, the various model of Waqaf, which we saw Turkish have done pretty well over its history. How can Waqaf contribute to microfinance, whereby we could charge and look at the returns to this microfinancing way below 3 or benchmark financing level of 5% or 3% financing. The returns is to contribute back to the Waqaf, to a cash Waqaf, and in order to sustain the Waqaf Foundation. That's number one. Number two is to also avoid moral hazards. We notice that if we usually give a cheaper financing to microfinance, the issue of moral hazard is always a fundamental issue on the ground. That's my just comments.
Thank you, Mr. Hisham. And also, maybe Mr. Chetinkaya contribute to this question also.
Thank you very much. Just a few words to add. I think the main issue in your question was about the economic development and inclusive economic development. So this is the area maybe where we can have the innovation, as I mentioned, for the Islamic finance. And you discussed the two edges. One is the investment banking project finance, the big ticket deals, and on the other hand, we have the small microfinance. So for project finance, it is critical in terms of developing the capital market as well, because you can divide this into several structures, including ijara, including istisna and murabaha. So it helps to develop new products. And in most of the Islamic countries, including Turkey, we have several infrastructure projects that can have at least a portion of it to be structured in terms of the Islamic finance principles. But the challenge is, does the Islamic finance entities have these capabilities in terms of funding, long-term funding, and are they ready to structure these in innovative ways using the capital markets as well? I believe there is an experience there, and it can be managed in that sense. For microfinance, for the Islamic banks especially, they are very much focused, as Muzaffer mentioned, on SME banking. But the approach, I agree, is more like approaching SMEs like corporates, basically based on collateral-based lending. So this is also an area that we need innovation, and microfinance may be in that sense where Islamic finance may provide a new approach. So the economic development will be providing both wealth and welfare, but with a certain distribution approach and an idea in our minds. Thank you.
Thank you. Yes, next. No question, please.
Thank you very much. I think this was a very interesting presentation. I'm from Bangladesh, and we are in the process of setting up a commodity exchange. I would like to ask Mr. Nihat whether Borsa Istanbul is also looking at Sharia compliant commodity exchange, because this will reduce the risk of exposure, because sometimes in commodity exchanges, you know, there's huge risk and manipulation. So is there any way you can assist us in ensuring Sharia compliant development of a commodity exchange, particularly the World Bank Center that you are mentioned, whether they could give us the technical assistance to set up this commodity exchange? And regarding microcredit, Islamic microcredit is, you know, microcredit, Bangladesh has been the pioneer, Dr. Yunus, but I think the Maybank CEO made a very important observation that the interest rates, sometimes in Bangladesh, it would reach even 30%. So we believe that is interest-free microfinance is the answer, and coupled with zakat and waqf institutions could be the way forward for inclusive growth and distribution aspects. So I think this is a very interesting combination of instruments we can look at, because in countries like Indonesia, Bangladesh, the growth is not inclusive but exclusive. And also in the North African countries, the Arab Spring has resulted because of this exclusive growth, leaving out large segments of population from the economic development. Thank you.
Okay. In terms of commodity exchange, yeah, Borsa Istanbul has some attempts in order to develop commodity contracts that is traded in its, futures and options market already, and but this is conventional finance. And on the futures and options markets, we are trying to develop futures and options on steel, on iron, etc. But in terms of Sharia compliance and commodity markets, we have already, before setting up and demutualization of Borsa Istanbul, Istanbul Gold Exchange was a separate entity. And in 2013, two institutions came together, and Borsa Istanbul has emerged together with the Turkdex, Turkish Derivatives Exchange in Izmir. And one of the main participation banks in Turkey, Kuwait Türk, is one of the main members operating in that gold market of our stock exchange. But just in terms of Sharia compliant commodity exchange, we as Borsa Istanbul have no direct project which we are undertaking now. But we strongly believe that the development of commodity markets under our WIEF, which is called Futures and Options Market, will also help to the development of Sharia compliant commodity instruments. Second part of your question, World Bank Islamic Finance Development Center will work as a research center, and also its areas of studies also include microfinance, by the way, and in terms of microtekafül, microfinance, we will have some academic studies within the center, and also in terms of product innovation and standard setting, the center will also develop globally acceptable reports and some academic research and share these with, of course, Islamic countries. We have already initiated our, interviews and meetings with various stakeholders as Global Financial Center. We have some meeting with COMSEC, CESRIC, OIC, and we will, IDB, we will work together with these institutions and try to increase the awareness of Islamic finance, both within Islamic world and also within non-Islamic part of the world as well.
Thank you, Mr. Danish. Can I? Mr. Hisham, for the Maybank, do you want to add something for the?
No, I just wanted to highlight about the rate.
Okay.
This was a challenge.
You want to add?
Okay,
Professor?
On the this Sharia compliant commodity exchange, I should say that you should talk to Malaysians. Bursa Malaysia has already developed what is known as Suqus Sila, which is for commodity murabaha. It is specifically for liquidity management. Okay. However, in my opinion, the infrastructure is there to come up with a much improved commodity exchange in compliance with Sharia, which actually does transactions not only for commodity murabaha but for the real trading purposes as well. So that is one example you should be looking into. The second one is Dubai Commodity and Metal Exchange, and they have a Sharia aspect of this as well. Probably what you want to do in Bangladesh, that would have more relevance to Dubai Commodity and Metal Exchange. We ourselves have advised a client to come up with a Sharia compliant mechanism for trading in commodities on a murabaha basis, which is known as a real commodity murabaha, and probably this is something we can talk in the lunch break. My very short comment on the microcredit program or inclusive economic development in the context of Indonesia. I would say that anything on that level, that very micro level, you have to come up with something on the finance side which is local as well. So there has been huge emphasis on microfinance, but how about micro savings? And given that we have this rural banking system in Indonesia, if you combine rural banking with the micro saving programs, probably with the help of some mainstream banks as well, you can come up with a comprehensive model which on one hand side creates and develops savings, and on the other hand side there are users of these savings. Only then you can come up with a sustainable microfinance program. In different parts of the world we have been focusing on microfinance, but in most cases microfinance is a grant driven kind of activity. When that grant is not there, you are not offering microfinance. So local micro saving programs are essential for successful microcredit and microfinance programs.
Thank you, Professor. Okay, please.
Selamünaleyküm. My name is Hikmet Baydar. I am the owner of the Third Eye company, consultancy company in Istanbul. My question is to Mr. Muzaffer Hisham. Is there any plan to open branches in Turkey to diversify their portfolio's risk? And the other question is, as you know, there is a currency war in the world, so there is so much fluctuation in currencies. So maybe if we can swap and our Islamic finance instruments, so we can help to make a progress in finance in Islamic products. So, for example, Turkish participation in banks provide you by Turkish lira, for example, as muraba, and you can provide maybe ringgit to Turkish companies, so we can use local money. So that maybe that makes progress in Islamic finance instruments. Yeah, thank you.
Professor.
Sorry, Muzaffar. In terms of the branch, of course, we got to have a conversation with the authorities and the regulators, of course. No, and that's the reason why I wanted to mention about this kismet, because the last 2 years, as I mentioned, there's this trend that they talk about this emerging growth area, and of course, Turkey is one of it. On the currency, to be very honest, we do have some Malaysian companies who are investing in joint venture with Turkish companies. In all frankness, we do have some challenges on the fluctuation of the currencies. It does affect the cash flows in the returns because some of it are from the state funds that pays in lira and convert it into a dollar. There has always been also a challenge within ASEAN as well, where we have companies in Indonesia, Malaysia, Singapore, whereby our local currencies are not openly traded, are not allowed to trade outside the country. And this is what our conversation with some central bank to say, yes, we understand in terms of policies of countries not allowing foreign currency, their local currencies to be traded outside. But maybe for trading purposes, for example, infrastructure investments, joint venture on oil and gas, or that means for actual trading, to allow banks to trade their currencies offshore. For example, ringgit is a non-traded currency outside Malaysia. But if we have a trading partner like in Turkey, to allow, we've always requested Central Bank of Malaysia to allow ringgit, for example, to trade for specific purposes, for example, in Turkey or for example in certain currencies. That is a conversation that is always our recommendation to the central banks, particularly. But of course, it is a very sensitive topic when we talk about local currencies. But to answer your questions in terms of the, we do also have Sharia-compliant hedging instruments to allow the hedge but the challenge has always been the hedging instrument do need to have still a core currency, for example, US dollar, euro, or sterling. That's an example. Thank you, sir.
Thank you. And I want to add something to Mr. Hikmet's question that as the Turkey Finance Participation Bank, nowadays we are preparing a sukuk transaction, and this transaction will be based on the Malaysian ringgit. That's why, and it's still in discussing, and inshallah we will enter to the Malaysian market. Thank you. Okay. Please.
Not working.
Very good.
Okay. Okay. All right, no problem. I would like to address this question to Professor Humayun. You're an academic, and this is in a sense that as academicians used to say, because I'm coming from UITM, we've been discussing, I'm quite sure you're familiar with UITM, we offer Islamic finance. And people used to say that Islamic finance is WIP, work in progress, in a manner of speaking, because conventional finance comes first, and Islamic finance is, in a manner of speaking, Johnny come lately. And we discussed the problem that Islamic finance is saying the same thing in a very complicated way. And we were thinking about how to make it easier for people who wants to borrow and the lender lends. I'm referring to, I'm sure you're very familiar with this concept, the concept of tarawuk, where you have to go through a very complex process in order to borrow money. Can, for example, the institutes of higher learning find a much easier way than this complicated way? Because in the end, it is about marking up the commodity, and the borrower buys the commodity and sells back. And finally, then you have the installments, much in the same way as the conventional banking. Because conventional banking, you just say you want to borrow money, they will see your collateral, and then you sign up the contract, and they will decide on the interest and the installments paid. But in Tarawuk, it's very complicated way. And there was a suggestion, why not Muslims avail itself of a very powerful concept, instead of relying on the same template with a different approach completely. And this is the concept of wudu. Concept of? Wudu, when you take ablution. Because in ablution, because it's a powerful concept for Muslim, nobody cheats in ablution. You take ablution, you pray. When you know your ablution is cancelled, you go and pray. And there is no requirement for policemen of wudu or policemen of ablution. And because it is a manifestation of godliness and sense of piety, and you will not cheat in your prayer, because you will not pray without ablution. And it is the same thing as, for example, you borrow money. Why not we avail ourselves and look into that kind of concept, and you just perform the akad. And that akad is a very powerful kind of agreement, not only between you and the lender, but also witnessed by Allah. Just in the same way as you perform prayer, you take ablution. When your ablution is cancelled, you will not pray. You will not cheat in praying, because you know that Allah will not accept it. And it is a sin to go on and pray. And in this particular sense, we should avail ourselves of this concept and develop it further. Food for thought for you, Professor. Thank you.
Right. Yeah, Mr. Professor.
Thank you very much.
Thank you very much. Can you hear me? Yeah. Basically, first thing I would say that those banks which practice tabarruk or previously ENA, when we try to explain these concepts, they look complicated. Otherwise, when you go to an Islamic bank and you want to get financing on the basis of tabarruk, it's as simple as conventional banking, like this one. So I don't think in terms of complexity, Islamic products are more complex than conventional. Okay. Yes, when someone asks me, explain this tabarruk product, okay. Yes, it takes me about 5 to 10 minutes to explain it. Even then, some people would say that we don't understand. When it comes to conventional banking, someone goes to a bank to have an Islamic a home financing mortgage product. There, the guy doesn't want to know anything. Okay, I want to know what is the borrowing rate, what is cost of borrowing, and where should I sign. When it comes to Islamic products, we face probably 1001 questions. How this happens, that happens, and as a result of those questions, Islamic bankers have to explain. And when you're explaining the things, of course, okay, you go into details, and there is an impression that these are complicated transactions. In my view, I don't think. In practice, when someone goes to a Saudi bank to do a tabarruk product, it's very simple. Okay, sign on this one, you explain, okay, this is a sale and purchase agreement, this is a sale and purchase agreement, this thing and that, or you sign it. Within 1 minute, you can actually execute a tabarruk product transaction. So this is one thing. I personally don't like tabarruk. Okay. Hence, what you are suggesting to come up with something which is more powerful, probably, if we accept your argument, it's simpler. I would like to go for the concept of qard hasana, interest-free loans. Okay. And here the bankers would say that, where are we going to make money from? Okay. I give you reference to this organization called Akhuwat in Pakistan. The guys offer completely interest-free loans to small farmers and, of course, other people who are in need of money. And there is zero interest, no arrangement fees, nothing. If the guy is getting 50,000 rupees, he is obliged to pay only 50,000 rupees. And what is happening? These borrowers, they are contributing voluntarily. Okay. As a result of that, the contributions, voluntary contributions, no coercion at all. The voluntary contributions coming from these borrowers are bringing returns more than 70% in some cases, which banking would allow you, even the regulators wouldn't allow you to charge 70% rate of interest. So we have to come up with pure concept. Qard hasana, this is the pure concept. If we use it, if we trust people, make them our brothers, okay, they will take care of you as well. And in this whole process, I would say this cooperation would increase the size of the pie, and of course the individual shares, okay, they would be beneficial as well.
Thank you, Professor. Okay, please.
Assalamu alaikum. My name is Iqbal Sakrani from United Kingdom. First of all, thanks to the panelists for the excellent presentation. We found it extremely useful. I've got two questions. Both are interrelated. Our chairman mentioned the last WIEF forum in London, where the Prime Minister Cameron made a quite important announcement in terms of the sukuk and also in terms of Sharia compliant finance available for businesses as well as students loans for universities. Now, this important message that came in basically was the culmination of the work, as I'm sure Professor Maiden would know, over the last 20 years of discussions, communications with the Bank of England, with time of Eddie George, and finally this important message came out. What has been the impact of such an announcement to other non-Muslim countries as well as Muslim countries, because from the tables that you provided, number of countries have already started implementing, working on Islamic finance and trade, but there are many others who are still struggling, and we are not yet there. So first question is in terms of the impact and whether we see that this would really be a huge boost to other Muslim and non-Muslim countries. The second related question is, there are major economies around the world. And I understand it's still, we are early stage infancy in terms of the Islamic finance. But when you look at China, India, Russia, and the European Union, and even the United States, there is still very minimal discussion on this aspect of it. How do you see the WIF playing its role in terms of the way, alhamdulillah, we managed to get this powerful message in the UK to take it forward in other countries?
Yes, Mr. Professor. Right. This is a question for World Islamic Economic Forum, but I can answer it. First thing, I strongly believe that the words coming out of the leaders, the world leaders, the likes of David Cameron, Barack Obama, and so on, for anything, including Islamic finance, they have a huge impact. The announcement by David Cameron in November last year has already started showing its effect. Now, for example, the Prime Minister of Pakistan, Nawaz Sharif, was there. Now, his attitude towards Islamic banking when he was Prime Minister previously was completely different. The Prime Minister comes back home, okay, and he has initiated this huge program of developing Islamic banking and finance in Pakistan. There were some prime ministers and presidents from the OIC countries, Muslim countries, they were shy even to say Assalamu alaikum. And here comes David Cameron. He greets everyone in an Islamic way. So then people, I think the top leadership started thinking about it that, oh, well, it has nothing to do with Islam as a belief. This is a business. This is why I would say that, Muslim as well as non-Muslim countries, they have started looking into Islamic finance. Just imagine, okay, before leaving the office of the presidency, if Barack Obama says that I have looked into Islamic finance and I'm fascinated by it. Just these two sentences, they will have huge impact. So I would say that in a World Islamic Economic Forum, after this huge success in London in 2013, you have already decided about 2014 in Dubai, consider going to Washington DC. Okay. And if we can get something out of the mouths of the leaders in USA, I would tell you that this is going to have huge impact. When Vatican came up with a statement on Islamic banking, okay, it spread like anything on social media, electronic media, everywhere. Right? So we have to, of course, no one has attempted to quantify the impact of these statements. But if an academic study is conducted based on event-based studies, this event happens, what happens afterwards? So I think this is a very good question. I should say that well, what could be the impact of this kind of developments for the development of Islamic banking and finance worldwide? Now, the countries like China, India, USA, and Europe. Right. India, I would say that before these elections, Manmohan Singh, the last Prime Minister, he had softened himself. Let's see what happens to the new government. India is definitely a huge market, and once they decide to enter Islamic banking and finance, this would be a huge positive development in the global Islamic financial service. China, already quite a few developments are taking place. A lot of Malaysian institutions, they are engaged. I know Hong Leong Bank, they have interest in China as well. And a number of Middle Eastern banks, they have their engagements in China. USA, definitely, it was a significant player before 9/11. Afterwards, their interest has gone down, but it's coming back. Okay, but it takes one institution to create global impact.
Dow Jones, when it started its Islamic indexes, this gave a huge boost to Islamic fund management industry. Okay. If tomorrow another institution comes up with an innovative approach to Islamic banking and finance, and it happens to be a US institution, definitely this is going to have a positive effect. Europe, I should say that there has been a very active engagement for last 10, 12 years. France has been looking into Islamic finance, Luxembourg, Ireland, even Italy. And as a result of that, we find that there are now quite a few legislative changes. In France, for example, now there is a level playing field for murabaha transactions. Luxembourg has come up with a regulatory framework friendly towards Islamic fund management and so on, and so is the case in Ireland. For UCITS 3, UCITS 4 fund structures. So in Europe, definitely there has been a lot of work already done. It's only a matter of time. Right? One event will happen, and a kind of exponential growth of Islamic banking and finance may occur. And here I should say that Turkey can play a role. Okay. You are effectively part of Europe. You have one leg in Asia, other one in Europe. As Tun Hitam mentioned, you can actually play the role of the bridge. Okay. And it should be part of the strategy of Islamic finance development. And this new center you have already decided to set up. It's a World Bank brand. Okay. Happens to be in Istanbul. And this WB brand you can use in your own advantage, and of course in the advantage of Islamic banking and finance to influence developments related with IBF in European markets and of course in USA as well. And this is something which should be part of your strategic plan for this new center.
Thank you, Professor. I think it's time. Please, I will take the last question, and I think it is the time to finish the session. Please.
Thank you very much, Mr. President, Mr. Chairman. I did not intend to participate at all, except to observe and take note. But I'm happy that many of my advisory panel members are expressing their views, which I have no objections to. But since WIEF has been mentioned in a way that might raise some concerns, perhaps, or lack of information, let me just take the opportunity of here of making a few points, especially with regard to the good professor's remarks. We'd love to go to Washington, but reality demands that when we want to go to a country and initiate an activity, we must really be aware of the policies of the governments concerned, because if you talk about Islamic banking especially, one has to accept the reality that in that country there are regulations that allow that institution to exist. But insofar as the United States is concerned, India has been mentioned, China has been mentioned, and even a number of European countries are concerned. Many of them are still at the moment very lukewarm about Islamic banking, Islamic finance. Let's be very frank about it. And even though I say we don't touch on politics, but the reality is simply that many of the institutions as well as the citizens of the countries concerned, when they hear the word Islam, they still worry about it. I want to frankly tell you that in China, however Islamic you hold a function, they call it an Arab, an Arab gathering. And they equate Arab with Islam, but one way of trying to get away of using the word Islam, they use the word Arab. But nevertheless, the point is that they wish matters relating to banking and finance and business and halal industry, for example, to indeed come to these countries concerned. China is very shy of accepting and using Islam as in an event. The United States, as you know, that's why it's all started, the phobia and profiling of Muslims. So the whole point about it, I want to tell you that we are aware of how important it is to have this global reach, as I mentioned in my speech here, but I think we're making progress. I did not expect that within 10 years, London called us. They were the ones who were beckoning us to do it. And we are trying a little bit of a hard-to-get stance, simply because if they say they want us, we will go. But insofar as the United States is concerned, there's only beginning to be an awakening of welcoming institutions like World Islamic Economic Forum. We have been approached, why can't their ministers or their secretaries come? That's a good sign. Before that, they were very cool. It takes a long time. So we have to be very patient. I think one mistake we make in terms of approach, one misunderstanding would spoil the very effort, the constructive effort that what we are attempting to achieve. The good news is simply that after London, Spain says, please come and do something. They want a big thing. We have agreed on principle. And of all places, Korea says, I've just come back from Korea. They want us to have a full-fledged World Islamic Economic Forum. Can you imagine? Britain's understandable, Korea is saying so, and the Chinese are beginning to push through the provinces to say, what about it? So this is something which is very encouraging. The last point is that as far as India is concerned, just before the elections, a minister came to us, our office, to say, what about having something? Now, practically, at that time. So we're slowing it down, but the interest is rising very fast. And indeed, they would, indeed, if I may say, we have a distinguished member of our panel who's from India, who's here. We had a roundtable in Delhi, I think some time ago, but bigger interest on the WIEF as such is only slowly picking up. And we are not in a hurry. We're not rushing to get to Washington, in a manner of speaking, if we're talking about Washington. We'll get there, inshallah. We're very confident that we'll demonstrate by results and by the popularity, by the constructive way people are looking at us. We'll be there. I thought I should mention this because I'm also taking the opportunity of propagating us. Thank you very much.
Okay, thank you, Mr. Itam, for your contribution. And I think it's time to finish the session. And I also want to thank to our valuable panelists, and I want to thanks to the organizer of the MUSIAT and the WIEF and the MUSIAT. And also I want to thank to the other audience to attempt the panel and to contribute to the panelists. And thank you, everyone. Thank you very much.
Distinguished guests.
Thank you very much. Thank you.
Distinguished guests, we thank all role players and participants of the roundtable for such a fruitful session. Now, I would like to invite Mr. Nail Olpak and His Excellency Tun Musa Hitam to stage to give speakers their gifts.
I think in the middle, sir, please. Oh, okay. Oh. Oh, okay. Thank you very much. Thank you. Thank you. This is very beautiful. Thank you. Welcome. Is it for me? Oh, sorry. What? Oh. Oh, why? What's that? Oh, okay. I don't know. Thank you very much. Okay, very nice. Tiles.
And finally, this is for you.
Oh, but this stuff. All the time I come here. All things work for all the time.
Actually, my sister is living in the border. Yeah, he's how he is the chair of the an association that is aiming to develop this installation to Malaysia.
Oh, the husband of this.
Yeah. She is also
Thank you very much. Of course, sir, please.
Ladies and gentlemen, thank you again for participating in the roundtable. We will now proceed to lunch, which will be at the restaurant in this floor. Thank you.